Thank you for joining the 44th Collateral onboarding call. Today we have an exciting project, Kredika, joining us to talk about their purpose-built legal and technology framework, specifically for their MIP6 application that is up for green light poll as we speak, but also talk about the project in the larger sense, understand some of the technologies and strategies that are going into enabling the solution, and as well as meet the friendly faces behind it. Today, we're joined by Max and Artem, the co-founders of the project, as well as Victoria, chairperson, and John, CFO and head of credit for Kredika. So with that, I won't take up any more time. Pass the mic over to Max, and we'll get things kicked off. Max, the floor is yours.
Thanks, Retro. Hello, everybody, and thank you very much for joining us today. As Retro mentioned, I'm joined here by my three teammates, colleagues that represent the key management, key team for Kredika. So we, of course, looked at other collateral calls in preparation for this, and one of the conclusions I guess we made was that instead of boring you with 30 different slides and trying to guess what information you guys are interested in, we would do something else instead. We would each talk over one slide, introduce ourselves, and give you a general idea, remind you what Kredika is, in case you read our application, our MIP application a long time ago, or at least give you a bit of a background if you haven't. And then we will launch into questions and would rather answer the questions that you're actually interested in hearing answers to. So my name is Max Shmashuk. I'm a co-founder and CEO of Kredika. My personal background is in structured finance and lending. I've been working for the past, for the first 10 years of my stay in London in banks, in large banks, looking mostly after structured finance, structured credit products specifically. I was involved in some of the first securitizations out of Eastern and Central Europe. I worked on credit-linked notes and other exciting, interesting things. So the concept of taking loans and packaging them in a format suitable for investors is not new to me. This is what I've done. So the second part of my career, I actually moved on to entrepreneurial side. I had my own lending business, lending platform here in the UK, focused on SMEs. We deployed over 200 million pounds to small businesses here in the UK, supporting that sector, both in the sort of secured and unsecured space. So how does that all relate to Kredika? Well, these combined experience together with the experiences of my colleagues, they actually bode quite well to what we're trying to achieve. What is Kredika again? Kredika is intended to be a bridge between the traditional finance space and the centralized finance space. And more specifically, it is the way we're building it. We're building it to be an on-ramp for traditional finance, asset managers and lenders to be able to package their portfolios of loans and other real-world assets and repackage them into a format palatable for MakerDAO and other DeFi participants, specifically into ERC20 token format, and then create the infrastructure for depositing these tokens into MakerDAO vaults and being able to raise or mint DAI against this, convert the DAI, deploy this into the portfolio, and essentially operate the whole platform that would allow the movement of capital back and forth, would allow ongoing transparent monitoring of these assets. And the way, of course, we're doing this, we have to worry about many different aspects, but two primary things that we've been working for about a year to resolve are the legal structure and compliance structure, and of course, the technology behind the platform. We have now achieved a stage where we finally became comfortable with applying for a first vault with MakerDAO. We picked what we think is the safest product that we could have brought to Maker in the first instance. We have an asset manager, regulated asset manager behind the product and the portfolio. We have solid technology underpinning this. We have credit policy and processes that we believe make you guys comfortable with working with us. You know, building a ramp that would allow multiple large asset managers to work with MakerDAO is a big goal. It's like, you know, going to Mars and landing there and somehow surviving. So of course, before that, we need to learn to land on the moon and come back in one piece at least. And this is what this first application is. We are applying for 100 million vault, and we will fill this vault with a very, very safe types of assets. These are short-term loans to UK SMEs and developers secured by residential properties. Yeah, and each loan is provided at a loan to value, which means for every 75 cents or pennies that we provide in finance, there is $1 of collateral behind this. Yeah, then there is a further credit enhancement behind MakerDAO. There is also a junior capital provider. I will let my colleagues get into more details, but essentially this is the structure. In addition, we are drawing information from third-party providers. Part of Kredika platform is dedicated to making sure that there is less moral hazard, there's more transparency, and there's more accountability between different participants. So we allow direct access to participants like lawyers, property surveyors, and other licensed entities that could verify the status of the collateral, the status of the loans, and would allow MakerDAO and its core units to monitor what is going on with the collateral in real time on a real-time basis. So without further ado, I will pass the mic to Victoria, who is the founder and director at ERC20 and of course the chairperson in Kredika project, to introduce you to ERC20.
Thanks, Max. My name is Victoria Waxman. I'm a co-founder of ERC20, and ERC20 set up Kredika as a specialized project to work with MakerDAO. My background is in simulation and modeling. I started my career in South Africa, where I have been involved in the provision of services for banks, funds, and other financial institutions. I specialized in risk modeling and technology, which helps banks and institutions in different areas like credit collection and others. I have started several companies during my career, all of them related to the financial sector and technology. I sold one of the companies. I participated in listing of the other company in US, and I worked as an investment advisor for several VCs and funds. We started ERC20 together with 4 other partners, business partners, in 2015. And at that stage, we focused on the diversified loan portfolios, specifically for small and medium enterprises. We initially worked just with one fund, building these portfolios for this fund, but then we started to work with 4 other financial institutions. In total, we have 7 years track record. And the work which we were doing during these 7 years is actually the work we will be doing for Kredika and MakerDAO. It's first of all deal flow generation, credit underwriting, portfolio management. And what is very important, what we found really quite specific for UK environment and international environment, is structuring the deals per each portfolio. When I say structuring, that includes not just setting up SPVs, getting certain licenses which are required, but mostly bringing together junior and senior lenders, where I see MakerDAO in this case is just another senior lender who is interested in the collateral which would allow stability. We underwrite every deal ourselves. Those deals are generated and prepared by the network of partners which we created during these years. We monitor all deals, we monitor collection, and we provide security agent services in case the legal collection or other more hard collection is required. During these 7 years, we worked with a variety of products, secured and unsecured, and we can definitely tell you that based on our experience, property bridging, in which we have been involved since 2018, is the most secure type of product. We successfully managed and participated in the portfolio, in property bridging portfolios through the cycle, and we all know that the cycle was not easy, and even during COVID time, and it's 2 years of practically downfall in the cycle, we still managed to maintain the quality of this portfolio, and we had 0 losses of interest or capital for that specific product. That's why we suggest to use it for the pilot. The person who was responsible during all these years for the quality of our deals, for underwriting, for maintaining the success of our portfolios is John Harrison, who will be the next to take over from me on the next slide.
Well, welcome everybody. My name is John. I am Head of Credit and Finance at Yes Growth. My background is I was a PricewaterhouseCoopers partner. So finance background, I was within the audit department, so audited a lot of companies. I was an insolvency practitioner in the UK here and a corporate finance partner. I then moved into asset management and building portfolios for clients. I'm one of the founders of Yes Growth that will be assisting build the property bridging portfolio for Kredika. We've been building property portfolios since 2018 for institutional clients. We've carried out more than 600 property loans with over 300 million of GBP in value. So why do we like property bridging loans? Well, we can build a well-diversified property portfolio in terms of size and geographical spread, so we can spread risk. So we invest in properties right across the UK and in a range of sizes of loans as well. They typically range from 250,000 GBP to 1.5 million, with an average size of around 500,000 pounds. So 100 million portfolio might have, for example, something like 200 different loans in it. So there's a nice spread of loans that we can build in a property portfolio. Also, it's pretty straightforward. We only do what we consider low risk property bridging. So what do we mean by that? We mean light refurbishment. So it could be that the borrower needs the loan to buy a property and lightly refurbish it, do some painting, change the kitchen, that sort of thing, before either selling it on or turning it into a buy-to-let, so renting out the property. A lot of businesses in the UK need short-term loans to do that. They can't get a longer-term mortgage type loan until they've refurbished the property and let it out, for example. So we're at what I call the straightforward end of property lending. We don't do heavy refurbishments or land developments that require planning permission and have extra risk here in the UK, because getting planning permission is a very long and laborious process. So we don't do those sorts of higher risk loans. Another advantage is that often we can get interest paid up front in many cases, and if not, we will get interest serviced and paid monthly, unlike some property lenders that will allow interest to be rolled up and paid as a bullet at the end of the loan. Again, this portfolio won't do that. It will be interest up front or serviced monthly. We also have very clear exit routes. So we need to know that the loan is going to be repaid, so we can look at the potential sale value of the property, or we can actually go and approach mortgage providers here and get an upfront mortgage offer, looking later on at the exit route when the buy-to-let has happened. So we have quite clear exit routes, and it's one of the focus of the credit process. We also like it because it's short-term lending. As we said, it tends to be typically 12 months. It can go up to 24 months, but it means as the economic environments change, we can change our criteria. So, for example, one of the things we did during COVID, when the economic environment was not so good in the UK, was we lowered the percentage of the property value that we would lend against. So we lowered that down to around 60%. Since then, property is again increasing in value in the UK, much stronger economy, and lending is back up to about 75%. But it means that we can kind of tweak the credit criteria as the economy changes. Unlike if you're doing long-term property lending, mortgage lending over many years, where you can't do that. So we like property lending. We've got a tried and tested credit process. It's a sort of double process where our origination partners have carried out their own credit assessment in line with our criteria, and then our own credit team at Yes Growth will check loans that come through against again to make sure that they're sound from a credit perspective. And again, for property, there's some advantages. For every loan we do, it's reviewed by our credit team here at Yes Growth. We always get an independent valuation from a surveyor. And in the UK, we have something called RICS, the Royal Institute of Chartered Surveyors. They carry out an independent valuation of a property. It's a thorough valuation. They go to the property. They will show us photos of it. They look at the local market and how active that market is. They will do comparable sales that have taken place in that market. So we get a very clear view of the market value of the property. And again, as the economy changes, the RICS valuations will change their criteria. So they're starting. So they will be less bullish or more bullish, depending on the location, how many sales take place, how strong the property market is at the time that they're doing the valuations. So we look very carefully at that. Secondly, we get professional lawyers here who will check the legal ownership of a property to land registry data here, and the owners of the property, to make sure that they are the actual registered property owners, and they will carry out all the legal work in terms of the contracts. We credit check every single borrower using external credit providers as well. And as I said before, we carry out a detailed review on the purposes for the loan. We set out some more details in the MIP of the credit process. It's something that's worked very well for us, and we've been doing for many years now. So again, really what we're proposing here is a continuation of what we've been doing on the credit side, in building property portfolios for other institutional clients already. We've added, there are inbuilt additional protections for any of you that are concerned about, recovery of loans and what happens if a loan goes wrong. We will, Kredika will have a charge over each property, and in the UK that means that if a loan is not repaid or the serviced interest is not paid, we can legally step in, take control of the property and sell it. And it doesn't happen very often. It's happened in a small number of loans that we've done, and we've always been able to step in and get full recovery of the loan. It's a very tried and tested process in the UK to be able to step in and do that. In addition, we are only lending 75% of the actual independent market valuation of the property in the first place. And as Max said at the beginning, we also have a junior credit provider that is going to be providing a further 10% of the 75% required for the loan. So as we said on the slide here, actually MakerDAO vault exposure actually works out at 67.5%. So there's quite an inbuilt buffer, if you like, in terms of lending that's taking place against property value. So hopefully that helps those of you that maybe aren't familiar with property bridging in the UK understand why we're proposing to do what we do already for our institutional clients and build £100 million property bridging loan book with Kredika. I think now we're going to go on and talk about the tech side with Artem.
Yeah, that's true. Thanks, John. Hi, everybody. My name is Artem Tolkachev, founder of Kredika, and I'm in charge of technology and partly legal side of the project. To introduce myself, so I'm a lawyer by my background, so not a technical guy. I started my career in one of the largest European banks, BNP Paribas, and then founded my own law firm in which I was focusing on helping the mostly technology companies to deal with regulation. I came into crypto space pretty early. It was 2013 and probably was one of the first lawyers in CIS region who working with the crypto-related projects, helping them to deal with legal and tax problems and issues. Then I sold my law firm to Deloitte and became head of legal in Deloitte CIS, and also founded the blockchain lab in Deloitte. Pretty interesting times. So we were helping understand how the blockchain can be used for their business processes and for their business models. In 2018, I quit and founded the platform for issuance and secondary tokenized securities or security tokens called Tokenomica. So we spent 2 years building this platform, obtained a couple of pretty tough licenses like regulated crypto exchange in Malta and the broker license in Cyprus. But at the end of the day, we decided that we need to switch our focus a bit from the centralized model to the decentralized model, and then we founded a couple of projects in the DeFi space. One of the projects named BondAPT is a centralized protocol with a major idea to connect the corporate finance and the decentralized finance, providing the opportunity to the corporate finance to use as a collateral and receive stable coins for these bonds. So we met with Max like a year ago or something like this, and decided that it would be a great idea to connect, to combine our efforts in building the Kredika platform. So from the technology side, what do we have here? We have a couple of contracts that up and running right now, and we are using it. BondAPT, it's depository contract and issuance contract. Sorry for the quality of the image, but it was not that easy to show you the good quality of the pictures. Sorry, it's not. No, not this one, definitely. But it looks like our Kredika platform right now. Yeah, this one. Thank you. So we have a bunch of oracles that provides information about. To the left, please. A bunch of oracles that provides information about the status of the loan into the depository contract. Before depository contract, we are going through the process of approval of these loans. So this process include additional governance voting that allows to be sure that the particular collateral is suitable for issuance of the ERC20 tokens that's finally being used as a collateral in MakerDAO. So we have issuance contracts that issue ERC20 tokens and communicate with depository contract to be sure that there is enough collateral in depository contract to issue additional tokens, or if the collateral is not enough, then some tokens should be burned. And we have external Ethereum ecosystem, including Maker ecosystem, which we're communicating with. So we have a pretty extensive plans to develop this platform into something really huge. And right now we're in the process of development. But as I said, we're using a couple of contracts that are up and running since April 2021, and was audited and works perfectly. But for sure, the major part here is oracles and providing the real-time or close to real-time information about the status of the collateral into the platform. I think briefly that's it from my end. I'm passing the floor to Max, and probably will be glad to answer the questions. Thank you.
Yeah, sure. Thanks, Artem. I think the best thing would be to probably open this to the questions and see what sort of additional topics you guys in the audience would like to discuss. Could be anything from, maybe additional particulars on the legal or tech structures, or, philosophical, why we need real world assets. We're happy to talk about anything. Thank you.
Yeah, I'll go ahead and get things kicked off with some of the questions that have been lightly touched on in the forums. I think the first one would be for Artem or anybody related to the oracles. Is there a way for the MakerDAO community to engage with these oracle sources? Is there a dashboard related? And is there a dashboard related to performance metrics of the loan?
So right now, all the oracles that we have is this sort of paper oracles. Every time when you're creating the loan, a lot of independent participants, most of them are regulated one, create a sort of a bunch of papers that needs to be collected into single batch to issue the loan. So our depository contract requires this information, and so when and where the MakerDAO community can be involved. I think it's the best moment is when depository contract finally decided that, okay, this loan can be considered as a sort of a good quality loan, and it can be used as a collateral to issue the ERC20 tokens. So we are planning to use the governance model here, and we were actually discussing which way it would be better to structure. Maybe we should use a maker token, maybe we should use our own governance token to approve the particular loans as a sort of collateral that can be used to issue the ERC20 tokens that further will be used as the collateral in MakerDAO. So it's like various steps where MakerDAO community can be involved, but I think in my point of view, the most sort of important part is the part where the particular loan is considered as a sort of quality loan, good quality loan for ERC20 token. And guys, if you would like to add something, please go ahead.
Yeah, Retro. I mean, let me just quickly add a little bit. So the underwriting process is a well-established process in the traditional finance space. There are well-defined participants in the process. So there is, of course, the originator, then there is a underwriter, asset manager, and then there are these independent third parties like law firms, surveyors, etc. And again, there is a pretty well-defined kind of sequence and package of documents that need to be produced. Now, some of these are more digital than others. Some of them are still, they still need to go physically to the property, for example, a surveyor, and they then fill a report. Now, these things are gradually digitizing, and not everything will be on paper, even on day one. As an example, the bank data that we could obtain in order to check whether the loans are being paid according to schedule, for example, that data can be digital on day one, and it can be presented in a dashboard and can be open and can be and will be algorithmically a prerequisite for this collateral being eligible in the first place and good on an ongoing basis. And similarly, as we work with the parties and we digitize more and more processes, it will go from a simple sort of e-signature type of operation to more of a kind of on-chain proof of authority type approval.
Sorry, if I may add to the answer, a little bit of history. The reason why Yes Growth decided to start with Kredika, which I see as a MakerDAO specific project, was that still in 2020, we designed a blockchain-based solution for Yes Growth. Why we looked at blockchain, and we looked at the private blockchain, which would allow the necessary transparency for different portfolios, which we manage simultaneously. And for the future implementation, it will not be, I would say, phase one, but for the future implementation, one of the areas where MakerDAO could be, or representatives of MakerDAO could be directly involved and could see this results of underwriting and everything, is via having a node on the private blockchain, which we are building for our own portfolio management. But we don't see it as the step in phase one.
Yeah, so a few words from my end. For sure, the oracles, I think it's a sort of key problem in the whole concept of how can we connect on-chain with off-chain, right? So, and for sure, it's not, there is no simple answers. So as we can see, for the last 5 years, it was a lot of attempts to create some sort of trustless oracle, but it's not possible right now. Let's be honest. So every oracle that is being used right now and that it will be used next couple of years will still require some sort of person or couple of persons who will be putting the data into the on-chain. So for sure, we are trying to build the system as transparent as possible. That's why we created a few steps where the MakerDAO community can be involved, where a lot of other companies and the participants should be involved. But for sure, it's a long way ahead, and the sort of right approach will be, as Victoria described, providing an opportunity for the MakerDAO community to be involved into the process from the very beginning, when the loan is originated from just the very beginning. But it will require a lot of work and a lot of additional and one more comment from end. Right now, what is the major concern of the DeFi guys who is facing the real world? 8 of 10 participants don't understand how it works, right? So it's not that easy. So bridge loans, loans origination, and so on and so forth. And of course, anything can be built, right? We can build the system which will allow to walk through the whole process in the very beginning. But I think it wouldn't be useful, at least right now, because right now all the market and all the concepts of building bridges between real world assets and DeFi and crypto is like on the super early stage. And what we are trying to achieve here is to bring really quality assets and create the procedure as transparent as possible. For sure, understanding that okay, it can be some questions for oracles, but let's create a few sort of defense lines for Maker to help the community to be sure that everything is okay. Yeah, thanks.
Got it. No, I definitely appreciate it with that context, and part of the reason for approaching that question too is how the MIP6 application described like this two-stage approach to first onboarding with the vault and then possibly growing into a arrangement model. So knowing what tools could potentially be in the pipeline or some of the ideas that the community would benefit from in terms of transparency, I think will be important, and it's good to hear that is maybe not a focal concern right now, but there's some plan to support that and build that moving forward. More so focusing on that stage one, because a lot of my questions want to look more into the future, but for the immediate actions and for the purpose of this green light poll, you mentioned that a lot of work has gone into developing the solution already, and it's borrowing some successful pieces from Yes Growth and other technologies that have been developed. My specific question would be, what was the catalyst of that moment that your team decided you were ready to submit a MIP6, and then what would be the next couple steps in terms of that proof of concept or development that you guys are really looking to achieve with the MIP6?
Yeah, I can probably start on that, and then hopefully others will help me. So in terms of the moment, it was actually making sure that or getting to some sort of answer on a few different aspects. Yeah, and one of those important aspects is, of course, legal structure for this. Right. I mean, tokenization of real world assets and operation with these tokens is not obvious in every jurisdiction. Yeah, a lot of jurisdictions treat this differently. Some of them are more, some of them are less familiar with it. There's no perfect, almost kind of one country that could solve the issue. I can tell you in the UK, this is very early stage. So we've been working with, while working on a technical solution and while working on the underwriting, etc., we worked with two sets of lawyers, one set in the UK and one set in Switzerland, that were helping us to put together a structure that would allow us to basically build something that works both for traditional finance guys, for asset managers and lenders, specifically in the UK, and that works for them, that allows them to operate, to interact with Kredika without leaving the world that they understand and like. Yeah, so SPVs, loans coming from the SPVs, security documents, charges, etc. And then on the token issuance side, we, after examining very different countries, jurisdictions, we decided on Switzerland. As you may know, Switzerland was one of the sort of first countries in Europe to adopt digital asset law. It literally came sort of in the beginning of last year and continues to develop. And through kind of a few iterations, we've looked at different ways of structuring tokens so that on one hand, they are understandable to the real world and the legislators and the regulators, And on the other hand, these tokens could work with decentralized applications like MakerDAO. So once we had our answers to this, and once we then designed the particulars of the platform around that legal structure, and once we had, and the underwriting and asset management we actually had in place way before. Once all these things came together, and once we had the team in place and processes in place, this is when we thought, okay, we should engage with MakerDAO. We've been sort of following MakerDAO's venturing into real world assets for a while, and we finally think that we have something that could help with MakerDAO's strategy of scaling in a stable and sustainable way, where we think real world assets are one of the very important components of that. I don't know if anybody wants to add anything.
No, I think, Max, it's pretty clear. I absolutely agree that the sort of legal structure is one of the key elements here, because at the end of the day, we're providing to the maker the ERC20 token, and the major thing that makers should understand is what is this token, what rights it provides to the holders, and how if something bad happens, how maker will protect their interests. So I think, yeah, absolutely right. The legal structure is the key element here. But as we already discussed previously, legal structure requires us to build something trusted. Yeah. So we need to trust somebody. For sure, our goal is to build the trustless solution, because I think it's the major thing for the DeFi, and to build the trustless solution, not to rely on legal structure or on particular guys like our team or other team. And for sure, what we are working on is building this trustless solution. But the sort of tipping point was, okay, we have a legal structure, and at least we can be sure that the maker community will understand, okay, we have this token is something, it's not just useless piece of code in blockchain. It provides some sort of rights, and it can protect our interests. So
maybe one small but quite important trigger, which I would like to mention. I know there were a number of applications. Some of them were applications for quite big vaults. There is a reason why we are applying for that specific number, 100 million. At the end of January, we received an official letter confirmation from one of the Swiss banks that they are providing us the liquidity of up to $100 million, which is, as you understand, one of the reasons that some other applicants practically couldn't go ahead. So we believe that at this stage, we've got all the elements ready. The team with the right experience, both technical and asset management. We've got now 30 people on the asset management, credit analysis, underwriting, and we've got the bank and legal structure. So all the elements are now falling into place. And the other thing, what we believe, if we are now going with that specific number, 100 million, we could maybe use around 50 million of our existing portfolio to deploy relatively quickly. When I say existing portfolio, I mean those loans which already went through the mill and they are approved and they are performing. So that again would decrease the risk on the MakerDAO side. So as you could see, we gave a lot of thought to the moment when we can say, yes, we are ready, with all elements being in place, as well as our ability to deploy quickly.
No, and I'm glad you brought up the team size there too. That was another question that I had about how big and what sort of volumes that the team could support.
Okay. We have 30 people on the asset management side. It's deal flow generation, underwriting, processing, collection, and all these nice things. And we've got 12 people on the technical side. I'm talking about the team dedicated to this project. I'm not talking generically. That will be Kredika project team.
Got it. Okay, perfect. I believe the last question that I have would be a minor detail with the collateral. I think that's your area, John. You mentioned that these are short-term, non-heavy reconstruction type loans, refurbishment loans. Is there a percentage that you know about how many are borrowers or individual borrowers working on maybe smaller type investment projects, or how many more are larger established commercial firms that do this on a turnkey basis?
Yeah, well, I suppose there's a bit of a mixture. I mean, we only lend to companies, so it tends to be more experienced developers who have maybe a company set up that they do the development through. So, but they can be so they tend to be quite experienced smaller developers who've done a number of developments and maybe do 1 or 2 properties at a time typically, because we're not talking about the very large property companies in the UK that might buy up land and hold land banks that they then try and get planning permission for and then develop housing. There's a lot of that type of lending around. It tends to be larger, more risky lending in our view. If you're lending on land that needs to get planning permission, or then you've got to build a large number of houses to sell before they make a profit, that in our view is quite risky. So I was saying we kind of like the plain vanilla smaller developer who's got a couple of developments. They want to go in, put a new kitchen in, paint it, make it look nice, and maybe let it out. One of the advantages is that through our origination partners, looking at the exit for that loan, we can often in advance see and check that the borrower is eligible for a longer term mortgage. So once they've taken on the property, they need to let it out for about 6 months before they can get a longer term mortgage, but we can kind of check that they meet all that criteria up front. And our origination partners, and as a very well tapped into the mortgage market, we've got a lot of experience of longer term bank lending and working with the banks on that, so we can sell the properties on, and are very confident that we can do that. So yeah, that all works very well for us. Yeah.
Yeah, answered my question perfectly then. Well, I believe that's all the questions that I have. If there's any closing statements or thoughts that you'd like to leave with the audience, please feel free. And then I would also like to ask, what is some contact info? People have specific questions that they'd like to address with each of you. Whoever would like to start.
Sorry, I mean, I could only hear a part of what you said. There was some breaking up, but I believe, look, as the final remarks, I can say we are, quite excited to work with MakerDAO. As you can see, we've got various sort of mixture of experiences and expertise around the table that we hope provides a bit of credibility to this and gives you guys at Maker some faith in that it is worthwhile your time to talk to us and to put us through the vote and then put the core units, etc. We are, of course, very reachable. There are our emails on the MIP application. We are on Telegram, WhatsApp, and all other messengers, and we are happy to engage directly or collectively through other media with any follow-on questions. Thank you.
Maybe just one additional point from my side. We suggest now to start with this first vote, where Kredika will use a small asset manager, ERC Growth, to implement. And what is very important, this successful implementation would allow MakerDAO then to interest big players to utilize our platform, and that would definitely contribute to the growth of MakerDAO. We are the first step. We are the pilot. We believe we can do it and do it well, but the future is in utilization of this platform for big players.
Well stated. I think that's a good soundbite to end it on then. So we'll go ahead and wrap this up here. As a quick reminder, as of today's recording, June 8th, there's about 11 days left on the green light poll for Kredika, and vote early. If there's any questions, look for the conversations in the forums at forum.makerdao.com. And I'd like to thank everyone again for being our guests today on the call.
Thank you.
Thank you all.